Sorry, Panaben, we can't hear you. There's no sound. Sarvani Jai Shri Krishna, Jai Jinendra, Jai Swami Narayan, Sairam, Om Shanti. A very warm welcome this evening. And it would be nice if everybody had the videos on. I know some of them have got reasons. We have got a subject today on financial talk, and we've invited somebody special who is an advisor on finance, and she's a director of RC Wealth Limited, and she's had this occupation for the past 24 years of experience in financial institutions, with recent ones being with Citibanks as an investment advisor and a team manager. So shall we invite Rupal, who's there for us today, to advise us, and then we'll have Q&As as well as we go along. All yours, Rupal Ben.
Thank you. Thank you so much, Panna. And thank you all ladies for joining. As Panna said, I am a financial advisor. I started my own practice about 3.5 years back now. Prior to that, I worked for Citibank, worked for Barclays, I worked for Bank of Ireland. So I got over 24 years of experience. I have 2 boys, live in Watford. My eldest one, he's 21 years old. The youngest one is 17. And we have a dog as well. So that's another child in family. Today, the discussion, I would prefer if it is more interactive, because we only have about 7 or 8 ladies joining us, and I can see a different age range. I have prepared something more related to your requirements now, but that's just concentrating on retirement planning. But then I'm just gonna go through a bit about the company, which is St. James's Place Wealth Management, what the investment looks like, and how you should plan for your future, but not forgetting your present as well. So I hope that just makes sense. I'm going to share the screen a bit about the website. Just give me 1 second. So I hope everybody can see that. Yeah.
Yeah, we can.
Perfect. Okay. So prepare this financial planning website slide for everybody to just view. If you have any questions, want you to reach out to me. I will be giving my details right at the end. So the company that we work with, it's St. James's Place Wealth Management, and we exist to give you the confidence to create the future you want. This is a bit about our company. It's called St. James's Place Wealth Management. We have over 4,600 partners currently. We have over 130 billion asset under management. We all are professional. We all regulated financial advisors. I personally am qualified to advise regulated financial advice. So that means that I can provide holistic advice to my clients, where it comes starting from mortgages to investments that can go to ISAs, junior ISAs, for example, or coming outside, which is bonds, going to pension planning, going to protection planning, going to retirement planning, and later life planning. So the list is endless. But then again, we cater for individual needs. And it's a bespoke advice that we provide for personal clients, also business clients. Very important, we focus on building long-term relationship. What that means that it's not just about advising you this year and that is it. The review will take place, mandatory review will take place every 12 months, or depending on the need of their client, because things change, circumstances change. So 12 monthly review is mandatory. If not, the client can come back reactively as well and say that, Rupal, for example, my daughter's getting married, or I'm looking to buy a new property. So things change. So it will be a reactive advice as well. What we are proud of as an SJP advice is that the SJP guarantee the suitability of the advice that we provide to all our clients. And I'm going to go through more into detail as to why and how. What that means that it gives you confidence and control. It helps you achieve your personal goals and enables you to create a world that you believe in. We are again very proud of the investment platform that we offer to our clients. What we do is that we have an investment committee that manages the managers. What that means again is that it appoints the fund manager. They also set performance objectives. They also manages risk and strategy, and then make decisions to either change manager or leave the way it is. This is how we operate. So we operate globally. We have over 43 fund houses, 34 funds, and 17 funds where at least 50% of the strategy is exclusive to our clients. This is the service that we offer. So we provide holistic services starting from protection against risk, managing cash and borrowing, building and preserving capital. Told you about the guarantee itself, that SJP guarantees the suitability of the advice given by the members, i.e. myself or the other partners, when recommending any of the SJP products and services available. And this is exclusive to us, to be honest. Some of the factors to consider. I just have questions on the attendees. Do you have experience in investing?
No.
No.
Uma, no. Priyaben? Nisha? Okay. Kalpana? Leelaben? No. Okay. So I think it would be a bit too much for me to go through the slide in detail. But what I can tell you, when you invest, there's a lot of factors that one should consider. Starting from, let's go through this.
Can I just ask a question?
Yes, you can.
When you talk about investments, are you talking also about ISAs or just kind of investments in shares, or what sort of investments are you talking about?
Sorry. Yeah, sure. Who is asking me this question?
Avni.
Avni. Okay. Hi, Avni. Sorry, I can't see you.
No, my video is
So
not working. I'm really sorry.
that's okay, no problem. So Avni, when we talk about investments, it's predominantly, well, ISA could be one of the product.
Mhm.
But then if you're talking about your children, then junior ISAs again, could be one of the product, because when you talk about investments, it has to be a longer term plan, medium to longer term. If you have a short term need, for example, you have, say, let's say £10,000 that you wish to invest, but you need that money in 2 years, you will not be able to invest that money, right? Because when you invest into markets, it can go up and down, and there is a risk that you take, right? So when we talk about investments, it's investing into equities. Direct equities could be one of the investment, or mixture of equities and bonds could be one of the investments. But the product set varies. So product set could be investing into an ISAs because they are tax efficient products, or investing outside of ISAs, which are unit trust products. There are alternative products available in market. So there is various kind of products available when we talk about investments in general. Does that answer your question?
Yeah, it does.
Yeah.
Yeah, just to give a
Okay.
background, I know you've said that we are all of different ages and different places in our life. I'm semi-retired, 59. So obviously, I also, if you can talk about lifetime annuities, or I don't know if you're going to cover that, but that's something I would be interested in.
Okay, so maybe I think I can start off with that. Just one thing before we go into investments and talk about pensions or retirement planning, because that is what I will be focusing on now. Yes, Uma.
Sorry, I think again, okay. I think what is equity and bonds? Sorry.
Okay. Okay.
How about start? Okay.
Okay, so we have two questions. One to start off with retirement planning, and we can go with equity and bonds. Okay, I think let's stop this presentation for now. What I will go through, I will take you through another slide, which gives you example of basic investments. Okay. And then the next two other events, we will focus on different areas of needs. Does that make sense? I think everybody should agree with that, because I just see that, basic knowledge is important to start off any conversation, right? Yeah. And after this meeting, if you had any individual questions, you can always reach out to me. Okay. So just bear with me. Let me just find this particular thing that I'm looking for.
While you're searching, I think investments can be different ways. So I think I just wanted to start from basics. And what I know now is how much pay, sort of what I earn and what I spend, but not more than that. Sure. So I think basic helpful for me.
Okay, so Avni, I think this will help with your question as well. Okay.
Thank you.
So when we talk about investments, or a basic concept of investments, what does that mean? So you can keep your money in cash in your house. You can keep your cash in your bank account, or you can take that cash out and invest. Okay. When you keep your cash at home, again, it's not ideal because there are so many risks involved in doing that. If you put your cash in your bank account, which is savings accounts, so let's just say your current account paying interest, currently no bank current accounts are providing interest. So you'll have to go out of the current account and look into savings products, correct? Where the savings products interest rate could vary from 1% or 2%. What that means to you that your £1,000 investments, you're earning 2% interest, right? That's your savings accounts. You're making your money, which is your 2%, right? And it's essentially secure because your capital is protected within that FSCS limit, which is 85,000. Anything over that 85,000 in single institute, if anything happened to that institute, is not protected. Again, it's another area that we will be looking into it going forward. But just a simple example, savings versus investments. So your £1,000, you're earning 2% interest, and that's all you are earning. What you're doing in reality is you're not actually making any money, because if the cost of living, if the inflation is higher than 2%, you are losing money. If you're not, let's just say that the inflation is 9% currently, okay? If your investment is just making 2% over the year, your money is, you're actually eating into your capital, you're eroding your money, right? But if the inflation is 9%, and if you're getting 9% return, it's on par. Ideally, what you should be achieving is more than 9% to actually see the profit, to see the value of the investments or the savings that you make. Does that make sense to people? Yeah, great.
Yes.
Okay.
But
So
the situation we are, can I interrupt? The situation and the market's going at the moment, there is not a safe place where you can invest and you think, yeah, your investment will get a better return, because that will be waiting for 5-10 years for your money to grow.
yes, exactly. And you're spot on, Jyotsna. What happens with investments, if you heard back a few minutes back what I had said, that if you are investing, you should have medium to long-term timeline. If you had a short-term timeline, you will see the volatility, what you are seeing now.
Yes. Yes.
Right? So if you had a timeline which is longer than 5 years or 7 years or 10 years, yes, it's a wise enough for you to invest. And over a longer period, again, past performance is not a guide to future returns. But when you invest, and you should be investing where A, you are comfortable with, B, you should know where you are investing and understand the risk that are associated with that investments that you take on board.
Yeah, that's true. Yeah, what sort of risk taker you are? Medium, high, or low risk taker?
Yes, and I will be going into detail just in a minute, but hi Nisha,
Yeah.
you have a question.
Yeah, I think you answered my question. It was about risk taking, and it's difficult to know how much of a risk to take, because risk to invest 2 to 3 years is fine, but if it is a case of investing for 10 years, as you get older, it's a risk that you're taking.
No, it all depends on, so do you understand diversification?
Sort of.
Okay. So while we are on that subject, this is the risk attitude spectrum that we have. Okay, you can grow from low risk to high risk. Okay, low risk as an example, meaning that you have cash savings account and you keep your money in the cash savings account. Low medium risk, meaning maybe some of the ladies here, if they are semi-retired or retired, wanted to preserve their capital but still make growth or achieve capital growth by taking risk, but a lower to medium amount of risk. That's what we are here. Medium risk, again, it's achieving 50-50 balance, where I wouldn't say preserving your capital completely, but invest your capital in a 50-50 environment where 50% could be in equities, direct stocks, 50% could be in bonds, alternative investments. So you're mixing both of them at 50-50 level or 60-40 level and making that medium risk. Upper medium, again, very similar. The more risk you take, the more return you make. So how do you take risk? By investing into stocks, by investing into equity at a higher proportional level. Okay. So upper medium, again, goes into, say, 80% equity, 20% bond. High, 100% equity. I'm just giving you as an example here.
Yeah.
Okay. So how would you take that risk? Discuss cash, which is the safest investments one can make. What is a bond? So bond meaning that buying government and corporate bonds. Give you a simple example, a simplest example. Let's just take Barclays. Everybody knows Barclays?
Yes.
Mhm.
Okay, so Barclays want to raise money to, for example, buy another branch. I mean, I know they are getting rid of most of their retail branches, but their goal is to buy a brand new branch, let's just say in Watford. Let's just assume that, okay? How they gonna raise their money? They're gonna say to their investors like you and I who bank for Barclays, they say that, okay, I need £1 million. If you give me your £10,000, I will give you 4% return, interest on it. So you then invest your 10,000, in return, you get 4% interest. Somebody else will do the same, but invest 100,000 and get 4% return. And that's how they make the million. In return, give that interest or yield to the investees. Okay, that's in simplest form, we call it bond. It could be government raising money, it could be BT raising money, it could be BP raising money, but you're getting that guaranteed interest that is set at outset. Okay, that's a plain vanilla bond I'm discussing about. There are other structures available within bond, but that's what the bond investment is. Jyotsna, does that make sense?
Yes,
Nisha?
I do. Yeah,
Yeah.
I've invested
Avni?
in bonds, so I know a bit about
Perfect.
it.
Yeah.
Okay,
Yeah.
so this is the simplest form of investing outside of cash.
Yes.
Okay, so when now we talk about other form of investment, which is equity, right? What does that mean? Buying direct equities. So you can, let's just take Amazon as an example. Amazon is a company. You want to invest into Amazon. So what do? You buy their shares. But buying shares is a riskier investment because you don't know what the share value would look like. If you're buying into ordinary shares, you may get dividends. If you buy into preferential shares, there are other advantages. Okay. So by mixing equity and by mixing bonds, you create your investments. This is a simple way of putting into what an investment looks like. Okay. There are other investments that you could again invest into, like commercial properties, like buying commercial premises, right? Yeah. Alternative investments, you can buy direct gold. You can invest into, I'm not talking about physical gold here, I'm talking about, liquid gold. You can go and invest into oil and gas. You can go and invest into timber. So these are the or hedge funds. These are the other alternative investments available as a product to invest in. By combining all together, combining cash, combining bond, combining alternative investments and equities, you create your portfolio. And I'm going to give you an example of what it looks like. So you understand, I told you about this, right? These are there are again two objectives the client can have. If I am investing, let's just say if Jyotsna is investing at this age, would Jyotsna want to have a growth on her investment, or would she want an income in her investment?
I would want a growth.
If you want a growth, what that means that You invest your money, you don't take it out, and it gives you, it grows and it accumulates and it grows. That's your growth, right? If Jyotsna wanted income, then what she does, she invests, and whatever dividends or the interest that the investment is producing, she will take it out as an income every month or every year, depending where she's investing in. So these are the two different objectives the client can have. If you are a younger, ideally you don't need to rely on income because you're getting income from your employment. So what you wish to do, you wish to invest your money in accumulation funds so that the funds grow in line with your objective. However, if you are at a retirement stage and if you're heavily relying on income, then you look into income paying funds where you invest and in return you get an income monthly, quarterly, 6 monthly, or yearly. Does that make sense?
Yes.
So that
Yeah.
means you have to buy a lot of shares, I guess, in order to get enough dividends to pay income. No?
Invest in bonds and shares.
No, Nisha, no. So yes, that could be one of the product that you could take advantage by going into direct equities, by buying Amazon, Tesla, Apple, Google, Barclays, Tesco's. But what you are doing here, you are investing into a very high risk exposure. So you're exposing into, you have a high risk exposure by going and buying this from different companies by yourself. Okay. What we offer at SJP, we offer the same thing, but we offer in a fund structure way where you don't do that. We do, as our fund manager does that for you. Okay. So say, for example, you have 10,000 to invest. I have 1 million to invest and Jyotsna has 100,000 to invest. What we do, it's called collective investments or mutual funds. Maybe some of them you possibly have heard of this term. Mutual funds, unit trust, they are very popular in India.
Unit trust, yeah.
Exactly. So unit trust or mutual fund. So what it's a very simple structure. So you have a fund manager and you have a fund. Let's just say that the fund is concentrating India. Just a simple example, because that's possibly I could make you understand. So you have a fund where it's managing in India, but it's possibly concentrating on technology in India. Okay. So what you do, the fund manager will buy shares of all the companies that he thinks, technology companies that he thinks are, he does his due diligence and then he buys these stocks. So what you do, your 100,000 Jyotsna will buy unit of this fund. My 1 million will buy the unit, and Nisha's, for example, 10,000 will buy unit from it. And you see the growth. So what you are doing here, you're diversifying, you are minimizing the risk that you are taking, but you're also getting the growth.
Yes.
Do you understand?
Yes.
So for example, if we just look at a low medium risk portfolio, okay, this is, we call it portfolio. It's a lower to medium risk. This is how it gets diversified. So for example, you have 1% invested into UK equity, so UK stocks. It's just 1% of your 10,000, for example, will be invested into UK equities. 24% of your 10,000 will invest into international equities. 15% will go into alternatives, nothing in property, 60% in bonds, because remember, bond investment is a safer investment.
Safer.
So when you...
Is bond much safer than the other thing? At least it's guaranteed.
You can use the word guaranteed or not, because if you are investing into government bonds, then there is a guarantee involved.
The return is very low on the government bond.
I know, but when we talk about, you used a very specific, very strong word, which is guarantee, right? Nothing is guaranteed in this world.
Yeah, that's true.
Right? But if you look for government bonds, then yes, it's backed by the government, so it's 100% guaranteed. But if you look for Barclays bonds, I wouldn't say they are guaranteed, because if anything happened to Barclays, only 85% of your money is secure.
But nothing is
85,000, sorry.
guaranteed. Nothing is guaranteed nowadays. The way the economy is running.
I know, but I'm just kind of giving you as an example.
Yeah.
when you use
Yeah,
word
that's true.
guarantee.
Yeah. No, you're
it's not
explaining it
gu-
very well. You're explaining it very well.
Thank you. Thank you. So I'm just going to say that this is how a particular portfolio, not all of them, but this portfolio is being structured. So what you are doing, you are investing globally, you are diversifying your assets, and hence the return you will make will be diversified return. Okay. When you are taking low risk, 1 second, I'll come to you, Uma, in a minute, right? But when we talk about investments, it's about risk and reward. Okay. So if you're not prepared to take risk, you are not going to reap the reward. But if you prepare to take the risk, you're going to get the same reward. That's really important when you talk about investments.
Yes.
Okay. Yes, Suma?
Yeah.
Yeah, thanks, Rupal. You explained that fund and the fund, sorry, you have a fund and the fund manager, and then they sort of invest in different companies. So if it's my money and if I have the fund and the funded, so do I know in which companies it is invested?
Yes.
You will not be knowing exactly what companies. You will possibly know top 10 or top 20, because don't forget, some funds may have 200 companies, some funds may have 250, depending if you're investing into an active fund or a passive fund. If you're investing into an active fund, meaning the fund manager is actively taking decisions, they may change companies on a regular basis.
So you may or may not know every detail of which company, but yeah,
basic one. So let's just give you okay, so this is my website, by the way. So if you just go to rupalchohan.co.uk, you'll find everything about myself. And if I give you, just to kind of give you an example of the fund, how the fund manager invests. Okay. This is the main company website, which is sjp.co.uk. And let's just pick a pension fund. Okay. You can see my screen, right?
Yeah.
Yes.
Okay, perfect. Okay.
Portfolio now, is that the one you're showing?
Yes.
Okay.
I'm just giving you an example of what the fund looks like. Okay.
Sure.
Let's just use. Okay, so if I get equity fund, let's just do UK fund. Okay.
So yeah, if I say I want to invest 50,000 and I give you the money, so yeah, so I'm just trying to know what happens after that as a fund manager.
Okay, so answer your first question first.
Yes.
How the fund manager invest. Okay. So let's just say that, we've got an Asia Pacific fund, because remember, it's diversified. Okay. So I'm just taking one fund and giving you an example. That will be UK, that will be overseas, that will be UK, that will be emerging market, that will be a fund just concentrating on North America, for example. Okay. So we have a whole lot of exposure available. But for example, this fund is managed by two fund managers, Martin and Vinay. Okay. If you see the funds under management, they have over 3 million, 3,000. Okay. All these money that they have. So what, over 300 million? Right?
Yeah.
Asset under management, that's what the fund actually has. The fund risk rating is higher, it's upper medium. Okay, so you expect that because it's investing into overseas, Asia Pacific countries. And this is how the funds performed. So the fund started in October 16. And if you see last, how many, 4 or 5 years performance, since October 16 to now, the fund has performed 34%. Divided by 6, well, roughly around 6 to 7% return net of charges. That's what this particular fund has achieved. So if you want to know where the fund is invested, because the fund is concentrated or just focusing on Asia Pacific, it has 95% invested into Asia Pacific and only 2% in North America and some kept in cash. But to answer your question, you will see top 10 holdings. So Asia Pacific, you have HDFC Bank and all the Sony, ICCI, for example, India based, this is where the fund is investing.
I
Because
can't
this
see.
is
Sorry, I can't see that screen. All I've seen is the low, medium risk.
Yeah, same here. I can't see the example.
You can't. Okay, let me show you. Sorry about that. I should just. Okay,
So the
can you
fund-
see this? Can you
Rupal,
see this? Can you
Yeah.
see this?
Yeah, that's better.
Yes.
Yes.
Sorry, Rupal.
Perfect. Okay.
Fund manager does that research, yeah, like where to invest, how much will it be? It's not like, so he will invest, he will search the market and invest where is the best possible.
So Uma, when you come to me, I can just talk about myself, okay? I can't talk about other advisors.
Yeah.
So
Sure.
if I am advising you,
Yes.
we will first look at what risk, how much risk you can take,
Okay.
what your investment experience looks like, and what you have elsewhere. So we need to remember the main first thing first. We need to make sure that you have emergency reserve available for any unforeseen events, right? After that, we start investing. It can be a lump sum. It can be a drift fade, as in a regular investments, right? So first we establish how much money you have outside of emergency reserve, what your objective, what your goal looks like, what your risk attitude looks like. Based on that, I will give you an advice as to where you should be making investments. It will have to be with us because we will be advising on our platform, but that's how because it's a tailor-made advice.
Sure. I think it does help, Rupal. And sorry, I had another question. You know that 85,000. So is that only the money which is safe? Like if I have like 200,000 in an account, not all. If tomorrow anything happens to the bank, not all is safe.
No, yeah.
Yes. So the governor or the regulators on your investments, on your cash savings, as long as they are one entity. So say, for example, if you have Coutts and if you have, I think NetWest or RBS, they are part of the same company. So if you have money into two banks, but they are part of the one entity, only your first 85,000 is secure.
Okay, so yeah, so basically what I want is how can I mean, yeah,
Spread.
I have more than, so I shouldn't be keeping more than 85,000 in one bank or different bank. Sorry. Am I putting
you can't keep all your eggs in one basket. That's the rule that is applicable for your savings and investments.
Okay. Yeah. Okay. Thank you.
Okay. I was going through this fun fact sheets, and apologies that you couldn't see it, but this is what I mean by investing into Asia Pacific Fund. This is a fund manager. So we call it fun fact sheets. Again, possibly a bit too much for you guys at this point in time. So I'm not going to go into much detail, but this is what you should be looking at. How riskier the fund is. So when you go into Asia Pacific, it becomes riskier fund. Who manages the fund? So fund managers are really important. Their skill sets, their experiences, and how they performed over the years are very important. Fund size is very important. So you can see the fund size. Sorry, it's 1,525 million. That's what they have invested into these funds. This is the fund performance. So you can see from October 16 to March 23, you can see the volatility. You can see what happened in April time when we had COVID. and Brexit time again here as well. So volatility, this is how the investment performs. You can see again the performance over the last since launch, which is 34% cumulative performance. Then where the allocation is and what the fund holding is. Okay, this is what I was going through. Any questions on that? No?
No. Thank you.
Perfect. Okay. So I hope that I helped you. I mean, we can go through in detail, but if you wanted to know, like, on a one-to-one basis, I think that would be more helpful, because I can see everybody, you all have your own needs, and I'm happy to help. If you guys can reach out to me, for example, if you are semi-retired and if you have pension funds, you don't have one option of just going with that, whatever they offer. You can look out and you can see that, how you can better your retirement planning, or what options you have available to take out that pension income, or how frequently you can take it out, or whether you should just leave it there, how tax efficient it is. It's better to go outside and ask an expert for their advice before you finalize, to take that pension without any help or without any advice. That's what I would say.
And is there a sort of, I don't want to know the right amount, but what is the range of the fees that you would charge?
Okay, so again, it all depends on, the product that we are advising you on, and should you decide to complete. So, for example, if a need can be that you have a mortgage, we don't charge. Some providers charge because we get it. Some advisors charge, we don't. For protection, we don't charge because we get our remuneration from the insurance companies. For pensions and investments, the charges involved. We charge on a yearly basis. It all depends on how you are investing, what risk attitude do you have, what funds that you are investing. So let's just give you as an example, our charge for a high risk will not exceed more than 2% per year. Okay. And that consists of the fund management charges, the platform charges, and the ongoing advice charges. But that again, if you are investing, if you're just taking, just asking me for, what should I do? I'm happy to help, and there is no charge for this. For example, I've offered free seminars.
Okay. Thank
So,
you.
Rupal, can I just ask, if we were to come to you for advice, even if you charge, do we then have to buy the products from you?
Have to. That's what I'm saying, right? The charge will only be applicable should you decide to go ahead with us.
Okay.
But then again, who am I talking to again? Sorry.
Avni.
Oh, you. Okay, Panna. Yeah. So the charge will only
No, it's
be
Avni.
applicable.
It's Avni. It's Avni you're talking to.
Okay.
Actually,
Sure. Hi, Avni. Yeah. So the charge will only be applicable. Let's just say that, you come to me and you said, Rupal, we look holistically. It's not that we will just look at the product that we think is suitable. We will go through a financial questionnaire, for example, very similar to, sorry, hi Panna.
sorry, I'm waving at you because I have to leave, but I'd like to introduce you to Geeta, who is our founder for Women to Women. I don't know whether you've met her or not, but this is Geeta.
Hi, Geeta.
You're muted.
Hi, Rupal. Sorry, I got in a little bit late, but I don't want to disturb you, so just continue in your flow.
Sure.
But Panna's got to go.
So I'll leave.
Sorry, how many minutes do we have left?
Oh, no.
You've
I'm
got
okay.
time.
Yeah, I'm okay. But just Panna's got to go.
Yeah.
So that's why she's
Okay,
just
Panna,
handing you over to me, basically.
Thank you.
thank you so much.
You're welcome. Thank you.
Thank you. Okay, Agni. So what we were discussing is that when you come to us, it's pretty much like going to a doctor, right? If you go with one thing, your doctor will look at your past histories, and then, and depending on that, they will see that, okay, if is it anything to do with that past histories of yours, or this is completely new thing, and then how that is how they tackle. Very similar to that approach where, because we are a holistic financial advisor, we will look at everything that you have, starting from your income. If you are married or have a partner, then a joint income. If you have children, then age, or we need to know whether the kids are financially dependent on you, what your objective or goals are in life, your expenditure, what you wish to achieve in short term, medium term, long term, what you currently have in place. So when we analyze all these, only then we'll be able to provide you with a solution, right? And solution could be few things. That could be few options that you may have available. I will look at everything and I will say, you know what, Omni, whatever you have now, don't make any changes because it's doing perfectly. Maybe we can group again together in a year's time, or whenever needs change from your end. So that could be one option. The second option could be that, okay, I identify that it's fine the way it is, but this requires changing. And then I will then give you option and say that, okay, if you change this is what you would achieve outside of it. Makes sense. And if you feel comfortable, then you will say, okay, Rupal, I wish to go ahead with what you suggested. Because don't forget, once the suggestion is made and you become our client, we will handhold you throughout, whether it will be 6 monthly meeting or a 12 monthly meeting. You are my client for the rest of your life and for the family generation to come, right? So that's the approach that we have, or I have specifically, and it's a 12 monthly meeting is a mandatory requirement.
Thank you, Rupal.
No problem. You're welcome. Any more questions?
And so do we have to come to St. James's Palace?
It's not Palace, it's Place.
Place,
St.
sorry.
James's
That's the
Place.
company. That's the company.
Yeah.
But it's in central London, isn't it?
It's not in central London. We are
Near
actually,
Richmond.
yeah, we founded. So the founders founded the company in 1991. And we finally became a FTSE 100 company in 2014. So we've got 160 billion asset under management. So yes, it's an umbrella company. So when you come to us, we are restricted advisors. What that means that we will only provide products related to that company. However, we're talking about funds here. But remember, I showed you this. We are a global company. So let me just share this screen again one more time, so that you know what I'm talking about. And you can, by all means, if you just do SJP, so Sierra Juliet Papa.co.uk, you will know everything about us. So we are a global company. Let me see if I have it on this slide. If not, I'll send it out to you directly. Unfortunately, I don't have it on me, but if I can just guide you, hopefully you'll be able to see the screen. I'll just do stop sharing, and I do this and share again. So, okay, if you can simply just type www.sjp.co.uk. Can you all see the screen, right?
Yes.
Yeah, this is the company that we partner with. And if you just scroll to this, you'll see all about the company. If you do about us, it'll tell you what we are. If you go through products and services, you will see that we are holistic advisor, meaning we do investments, retirement planning, protection. We also do intergenerational wealth management. The other thing which is very important, outside of the pension and everything else, is inheritance tax planning. Again, if you guys are interested, we can make about 20-30 minute seminars, again, free of charge to you guys going forward. So we can tackle, today, Geeta, we just tackled basic investments. So starting from savings and equities and bonds. But going forward, if you wanted focused seminars, I'm happy to do that for you guys.
Yeah,
I think
I
that would
hope
be
that
good.
this helped.
Yeah, I think, Rupal, that would be a good idea. What do you think,
I would
ladies?
prefer one on
Yep,
Yeah,
thank
I
you.
think, I think
Yeah,
that
yeah.
would be useful. That would be very useful. Thank you, Geeta,
Yeah.
for
Yes.
organizing it.
Okay, great.
Okay, so yeah, if you didn't understand any of it, and if you wanted to know more about it, because each individual, they have their own. And by the way, whatever you share with me, it's data protected. So it will not even go to third parties. So just be rest assured that it's between you and us.
Okay,
Mhm.
thanks.
Well,
Thank
sorry,
you.
things very
Rupal?
different, the NHS
Sorry.
pension, everything.
Yes, Uma.
Yeah, sorry. Is NHS pension, I don't know. Whenever I spoke, they said, don't touch your NHS pension. Is it very different than the other things? Or have you got experience with the NHS things? Sorry.
So yes, I do. We can take this offline because it's gonna be very personal. But what I can do, just to give you high level overview, NHS pension is one of the best pension that one can have. And the reason being that it guarantees income for life, unlike the current pension schemes, which are DC scheme, which are defined contribution schemes. Also, if you again, to give you an advice on as to how much you should be investing, it all depends on the income that you're earning, the needs that you have for your family, the expenditure that you have. But investing into pension at an early age will help you retire early because A, it's a tax efficient product, and B, you can't touch it. So you're saving out of your income, which is gross, and you can retire at age 57, should you wish to, which everybody wants to dream of retiring early. So
I think it's changed. I think NHS pension age has changed now. It's not 57 anymore for professionals.
No,
I think it's changed to 60, I have a feeling.
It all depends on what scheme you are. So I was just giving you as a generic example. But if you were part of 2000 and I think it was 1995 scheme, 2008 or 2015. So yes, you may have a different, but I'm talking about a private pension age. Current private pension age is 55. So if you had a private pension, you can access your pension at age 55. The age is increasing to 57 in 28. So if you are 54, you can retire next year. But if you are in your 50s, late 40s, then before you access your pension age is 57. That's going up.
Okay. Well, how can I
but
make
Rupal, the other benefit of it is if after death you don't pay tax on the pension, if you got a lot more money than you supposed to have in your pot with the pension, you don't get taxed on it. You don't pay income tax on it. You don't pay
you are right.
HMRC.
No, there are two answers to that. No, there are two answers to that, depending when the death occurs. If the death is okay, so again, depending on what pension pot it is. If it is an NHS pension pot, then Uma, maybe you should listen to this. For NHS pension, if you die and if you've chosen your spouse to take the spousal benefits, then half goes to the spousal, and that is it. It stops there if the spouse passes away. If you had a private pension arrangements, then it all depends on what you have chosen. So if you've taken an annuity and given it half to your spouse, then obviously the pension dies with the spouse, the second death. If you have a DC pension scheme, which is defined contribution scheme, let's just say you have 100,000 in there, you passed away before the age of 75, then your beneficiaries can access that pension free of charge. They don't pay any taxes on that. However, if your death occurs at the age of 75 onwards, then there are tax charges applicable.
Okay.
I'll come and
Okay.
see. We'll talk more. I think, yeah.
No problem. No problem. Any more questions?
The other thing is, this is from my son, he with a review that St. James's charge more fees. Is that true or not?
You know what? We've had, and I put my hand up, we've had a negative press about 6-7 years back.
Yes.
Okay. And it was entirely our fault where we couldn't manage the negative press. So when you have a successful company, there will be reviews, there will be good reviews, and there will be bad reviews. Okay. If we were charging more, we weren't sitting on 160 billion asset under management till date, and we wouldn't keep on growing. Okay. If you compare our charges, for example, remember, we are not online company. We provide face-to-face bespoke advice. So when you invest into a person giving you an advice, hand holding you on a year basis, that charge will come. If you compare us to online platforms, yes, you will see that our charges are higher, because online platforms, they don't offer a tailor-made service. You only go and buy the product that they have on their platform, and that's it. That's the reason they can afford to give you the lower rate charges. They are not investing. They possibly most of their funds are not active funds, meaning their fund manager is not even charging. B, they only have very limited service that is available, and it's not tailor-made service to you guys, right? So yes, when it comes to face-to-face advice, in fact, we do have I can share it to you guys next time, how our charges compare to the other face-to-face service providers, and we come very low. So tell your son to do the research. And if he
No, he
wants
did
me
it, but this was a while back. This is why when you mentioned 6-7 years ago,
it
he
all
did.
depends.
Yeah.
So it all depends. When we talk about investments, we do have upfront charges, but then again, it all depends on who you working with, what relationships you have. We can deviate on our fees. Okay.
Okay.
That
Thank you.
doesn't necessarily mean that we go down to zero, but it all depends on the relationships, right? But if you come to me, don't forget that we're not just looking into one area. We are looking holistically, right?
Yeah.
We're looking even what you have outside. If you go to HL, Hargreaves Lansdowne, cheapest platform they have available, but you don't know the charges that you pay. You may be paying higher charges to them because they don't disclose everything transparent as we do.
Okay, thank you.
Okay.
What
So
are
there
your
may
fund
be
manager charges? Sorry, what are your fund manager percentage charges?
So it all depends. I told you, remember I gave you
The
example
manage-
as a 2%.
Yeah,
Right?
2%.
But that 2%
On
per
the amount?
year comprises of 3 charges included in that 2%. You have the fund management charge, because each fund is different. Each fund has their own requirement. So the fund manager charges differ fund by fund. So I can't tell you that, okay, it's 1% or it's 0.25. I can't tell you that. But the overall cost that you pay for a higher risk fund, again, because lower to high, the charges, again, I said up to 2, right?
Yeah.
So let's just take high risk as an example. It can be 2%, which comprises of the ongoing charge, the fund management charge, and the admin and platform charges. So for example, if you have 100,000, you'll pay 2% per year to manage that fund. on our platform. And in return, you get bespoke advice, tailor-made advice, and regular reviews, where the similar charge could be applicable to HL, because if you see that there is a platform charge, there is a fund management charge, there is an ongoing admin cost, and if you put all these together, it can come to very close to that as well. You just have to do your own research if it is outside.
Okay, thank you.
Okay.
Hi, Rupal.
Out to you, Rupal. Sorry, are you going to, is that on the website or you're going to detail?
Sorry, what you're talking about, Uma?
Sorry, how can I make an appointment to see you, or yeah?
I have my number. I can put my number in a chat box. If you can just simply WhatsApp me, I prefer WhatsApp. 077171190. And if you can just put your
that's
name.
the one.
Yeah, because what you do, if you just put your name and that you attended the seminar on today, when it comes to charges, I'm sure that I can do something better.
Can I
We'll
ask?
take your offer.
Can your contact details be put on the group, Geeta? Is that possible?
Yeah, of course we can. I mean,
Yes,
you can
thank
see her number here anyway. 077-17190-777. So take her
Can't
phone
see
number
it.
down.
Can't see. Oh,
Yeah.
sorry, can't see it. Yeah.
Yeah, it's at the
And-
bottom of her screen, left.
Yeah. Taken it.
I've
Yeah,
taken
do a
all of you
screenshot.
take her number.
Yeah, just taken a screenshot.
Yeah, just
And if you
taken
wanted to
that, yeah.
know more about myself and the work, I have my own website as well, which is linked to the main, website. It just goes under my name.
Okay.
Thank you, Rupal.
You're
Yeah,
welcome.
thank you.
No problem. So I
Hi,
hope I
Rupal.
helped you.
Hi,
Thank you
Rupal,
so
it's
much.
Ramila.
Thank you.
Ramila, hi.
Hi. You just mentioned regarding NHS pension.
Yeah.
So, sorry, I missed what were you discussing? Can you repeat that?
Do you have a specific case that I can discuss? Because I was just discussing about Uma's personal thing. I mean, she currently works for the NHS, so I was just talking about that. But is that for
Right.
yourself or is that?
Yeah, I'm retired, but I've got NHS pension and I have nominated already, not my spouse, but my son. So what
Mhm.
happens if I, die?
Okay,
Will it-
how old is your son?
He is 47.
Okay, and he is financially independent or dependent on you?
No, he's not.
Okay. So nomination meaning that whatever the death in service benefit or whatever lump sum that they release, the nomination can go to your son, so he can be a beneficiary of that amount,
Okay,
but he will not be receiving the pension for life.
okay. If it was my spouse, he would have.
Your spouse, I think it's an automatic nomination unless you taken it off. Again, it all depends on the service, on the pension scheme that you were part of.
Okay.
But from my understanding, the NHS spouse nomination is automatic. So he's alive, right? Your spouse?
Yes.
So upon your death, from my understanding, he would receive half of your pension income for the rest of his life.
Okay. Thank you. Thank you very much.
Any more questions?
Yeah,
Thanks,
any more
Uma.
questions, anybody?
Sorry, no questions, Rupal. Thank you very much. I mean, I know you mentioned you do like free seminars and stuff too. I don't know if you can share, and well, I'll see you for personal like bespoke advice and portfolio creation and everything. But yeah, any like just like free seminars and stuff, if you could share, then it would be
Sure.
great.
I will
So
always...
basically, sorry, Rupal. So basically what Rupal has just done, this was general to cover everything, but she can go into specific parts of the finance. Right, Rupal? She
Yes,
can
correct,
target
yes.
specific parts.
Individually, yeah. Thanks.
I mean, the next one that I'm planning to do, it's pension, but in generic way. That is what I had prepared, to be honest, because I was anticipating that, the age group that we all are, maybe pension could be main focus going into inheritance tax planning, and bit of future planning as well, how to minimize tax. But it just felt like that, we needed more basic knowledge before we go into that. Maybe in a month down the line, if you had any questions on today's, come back to me. I can brush up your knowledge even more.
Okay.
So the next seminar, if you are attending, it will make it easier for you.
Thanks. Yeah.
Thank you.
Thank
Rupal.
you.
Yeah, excellent,
welcome.
Rupal. Thank you very much. That was very, very useful.
Thank you so much. Well, I hope that I made sense.
Thank you,
Thanks so
Rupal.
much.
You were
Thank
very
you.
good. Thank you so much, Rupal.
Thanks. Yeah.
Thank you.
Thank
Thank you,
you.
guys.
Bye.
Thank you.
Take
Everybody.
Yeah.
And
Bye.
please
Enjoyed.
stay tuned in. Wait for the next one when it comes in about a month's time, right, Rupal?
Yes.
I prefer
you.
in a month, yeah, because
Yes.
in between, if any ladies had any,
Anything specific.
issues or concern, they can reach out, and then the next seminar that they can attend, they know exactly what I'm talking about.
We can absorb what you have said and do some homework.
Yes,
Yes, you can
Yes.
set them some homework, Rupal.
I can do
So
that.
check out
yeah.
their
I can
website.
I can just talk about, okay, what's happening in the market, what happened last month. Actually, yeah, the homework. Check out what happened to SVP, which is Silicon Valley, SVB, which is Silicon Valley Bank, which was part of US,
Yes.
and Swiss Bank, which is again, very
Problems there.
important private bank, or a
Okay.
yeah. So just maybe do a bit of research. You'll understand what's happening in the markets currently.
Sure.
Thanks. Yeah. Thank you.
Okay,
you.
thank you very much.
Thank you.
Thank you, everybody, for attending. Thank you so much,
Thank you.
Rupal.
Bye.
Thank you.
Thank
you.
you.
Thank
for
you. Good night,
organizing it.
everybody.
Thanks.
Thank you.
Bye.
Thank
Okay,
you.
bye-bye.